Today, COVID cases surge as everyone holds their breath in the run into Christmas. That's our main story. Also this morning, who's working from home and who isn't? The buy now, pay later sector under scrutiny, and the state of Texas starts rebuilding Donald Trump's wall with Mexico. It's Monday, the 20th of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Fiona Manning, Portfolio Manager at Apostle Funds Management, about investing green. But Sean, it's Christmas week and the numbers of COVID cases are surging. It sounds very familiar.
It sure does, not just from last Christmas, but many times over the last couple of years. New South Wales recorded more than 2,500 COVID cases yesterday. More than 20% of those were of the Omicron variant. There were just under 2,500 cases recorded on Saturday. Hospitalised patients have risen above 200 in recent days, though the number in intensive care remains relatively low. That's the good news part of the story. Pressure's building on New South Wales Premier Dominic Perrottet to reintroduce QR check-ins and mandatory mask wearing for indoor environments. So far, he's resisted. The surge is hurting businesses. Hospitality venues have reported booking cancellations as people try and avoid being at risk ahead of Christmas. In some regions, rapid antigen tests are in short supply as people buy up before Christmas Day. Residents of New South Wales are now signing up in droves to get booster shots, with the number delivered by state clinics quadrupling last week alone. Victoria reported 1,240 new cases yesterday and 4 deaths. Of those, a relatively limited number have been Omicron. Federal Health Minister Greg Hunt yesterday said it's unlikely Australians will be forced to re-enter lockdowns, saying the fact that numbers are still relatively low and it's summer will help out, but I'm not so sure.
Yeah, the news overseas, Sean, seems even worse.
It is. The numbers overseas are surging. European nations are heading into lockdowns and restrictions just days before Christmas. Over the weekend, the Netherlands imposed a nationwide shutdown, pretty much cancelling Christmas. France, Cyprus and Austria have tightened travel restrictions. Denmark has closed many venues, while Ireland has put an 8 p.m. curfew on pubs and bars. Around 1/3 of COVID cases worldwide are now of the Omicron variant. That's the estimates anyway. Now, universities in the United States are moving back to online learning, and President Joe Biden is expected to address the vaccination issue in a major speech tomorrow. And Michael, it's increasingly unclear how severe the Omicron variant is. We're seeing all these huge numbers, but does it impact people as much? There was one concerning study out over the weekend, and it's pretty reputable. The risk of reinfection with the Omicron coronavirus variant is more than 5 times higher than other variants, and it's shown no sign of being milder than Delta. And that's according to a study by the Imperial College London. It's going to be a very anxious lead into Christmas, Michael, for many people.
Geez, you can say that again. So how did markets perform on Friday, Sean?
Locally, the S&P ASX 200 closed up slightly to 7,304 points. It ended the week down about 0.7%. Now, some of the best performers on Friday were the gold miners. The banks also had a pretty good day, led by the Commonwealth Bank, which was up nearly 2.5%.
And what about overseas markets?
Well, it was a rough weekend all around. The Dow Jones Industrial Average closed 1.5% lower, and the broad-based S&P 500 was off 1%. The tech-heavy Nasdaq was flat, having fallen hard earlier in the week. Market watchers said Wall Street was likely to be increasingly volatile with lower volumes around the holiday season, clashing with concerns about inflation and higher interest rates. European stocks were also low, with the Stoxx Europe 600 off 0.6% over the weekend. German and French markets were significantly lower, while the British bourse was slightly higher. The Aussie dollar starts this week trading at 71.2 US cents. Bitcoin came off over the weekend, and 1 unit is now worth less than $47,000 US. Oil prices fell over the weekend, with a barrel of Brent crude down almost 3% to $73 US, and gold is trading at just under $1,800 US an ounce. Finally, Michael, iron ore prices hit a 6-week high over the weekend of around $110 US a tonne. Good news for the big miners here. That's on the back of expectations of rising steel production in China.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning to kick off the week. There was a major tax ruling in the federal court on Friday that could have significant implications for multinationals operating in Australia.
Yes, and it's all about the amount of tax they pay here. Singtel probably known as Singapore Communications, had appealed a tax assessment relating to the acquisition financing of Singtel Optus about 20 years ago. Now, according to Bloomberg, post Friday's decision, experts expect that multinationals will be under much greater scrutiny on intra-group financing that doesn't appear to have taken place at arm's length, as if it were done between two unrelated parties. It's all about something called transfer pricing. And the Australian government, and indeed Australian people like you and I, want multinational companies to pay their fair share of tax in Australia. The ruling on Friday will help that.
Yeah, absolutely. Now, Sean, more than 40% of employed people were working from home during August, according to the Bureau of Statistics.
Yes, I suppose it's not really surprising, though it's interesting to look at the types of jobs that worked from home. Almost 2/3 of managers and professionals were able to stay home regularly, but only a quarter of other occupations. And what hasn't changed is when people work. It's still mostly Monday to Friday, normal working hours, notwithstanding people are not in the office and many companies are espousing the benefits of flexible working. The Bureau of Statistics data shows that in August this year, there were fewer lower paid workers than before the pandemic. That's 4 million compared to about 4.5 million. What that shows is that low paid workers were particularly hard hit by shutdowns. The median employee earnings in August was $1,200 per week, up $50 since a year earlier, and the median hourly earnings rate remained at about $36 per hour.
Okay. Now, the Australian Institute of Company Directors released its Director Sentiment Index last week. What are the big issues that directors are worried about?
Well, you might think it's going to be coronavirus, but the two big ones aren't. It's actually workforce shortages and cybersecurity. More than half of the directors in the survey nominated them as the major issues for 2022. They're in front of COVID and climate change and Australia's relationship with China as big challenges for corporate Australia. The survey of more than 1,600 directors finds that overall, directors have a bullish outlook for business and the economy. Almost 2/3 of respondents believe business will be on a sure footing in 12 months. That's good, with positive indicators like investment, turnover and profits expected to grow.
Okay. Now, we love talking about the buy now, pay later sector because there's always so much happening. And that's particularly the case in the US at the moment, with regulators there taking a really close look at the sector.
Yes, the US regulator, the Consumer Financial Protection Bureau, issued a series of orders on Thursday night Australian time, Friday morning, to 5 US players, including Zipco, Affirm, Afterpay, Klarna and PayPal. It's worried about accumulating debt, regulatory arbitrage and data harvesting in the consumer credit market. That market, of course, is quickly changing with technology. A regulatory crackdown is coming in the buy now, pay later sector. We've been talking about that all year. It won't necessarily be bad for some companies, though. In fact, there are probably too many players in the market, and a bit of regulation will be good for customers, merchants, and some providers. Having said that, Zipco's share price ended down more than 6% on Friday, and Afterpay fell nearly 8%. Just one final note on that, Zipco wasn't commenting on Friday about speculation it was considering a merger with US rival Sezzle. Both companies hit year-low share prices following the US announcement late last week. There's still more to come on that one.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that unprecedented coal and gas prices and a softer Australian dollar are set to inflate the already anticipated surge in resources and energy exports this financial year to a record $379 billion, though a drop-off is forecast in 2022-2023. The Fin's also reporting that auction clearance rates fell sharply over the weekend to 63.4% nationally. That's according to CoreLogic. It shows that Sydney's clearance rate dropped to 61% and Melbourne was 62%. For the fourth consecutive week, more than 4,000 homes were taken to auction.
Running through some of the other stories around today, New South Wales Premier Dominic Perrottet has introduced a number of new MPs onto his front bench, with some long-serving members either resigning or stepping back. The state's longest-serving Nationals MP, Melinda Pavey, was dropped from Cabinet, according to media reports.
Deputy Prime Minister Barnaby Joyce has been cleared to return to Australia after self-isolating in Washington for 10 days, having tested positive for COVID-19, of course. Mr Joyce, not surprisingly, is delighted to be coming home for Christmas. Now, he also explained that he couldn't use the gymnasium in the hotel he was in, obviously because of isolation, but he could run up and down the corridor a bit. And Michael, guess who he listened to? Who would Barnaby Joyce have on his iPhone?
Oh, I'm kind of thinking Lee Kernaghan and John Williamson.
That's a really good call, but no. Red Hot Chili Peppers, The Doors, and the Rolling Stones.
I've just learned something, and I don't necessarily agree with his musical taste, but to each his own.
That's right.
Now, Sean, the US, UK and Australia have committed to finalising a program of work by early next year following the first AUKUS meetings at the Pentagon. An official statement from the White House said the delegations discussed the intensive work underway across the governments and the significant progress made in the 3 months since the announcement of AUKUS.
Don't you reckon when you see an announcement like that, you really wonder whether they've actually done anything?
It does just feel like a holding statement, doesn't it?
It does. It sure does. Michael, toll road group Transurban has flagged a total of $3.4 billion in extra costs for the development of the West Gate Tunnel in Melbourne, with its share to be $1.7 billion, and the Victorian government will have to stump up the other $1.7 billion. Finally, some certainty over that cost blowout, which has been hanging around for a long, long time.
And one last one, Sean. Sonic Healthcare said it has acquired US pathology business ProPath for an unspecified sum. Sonic said ProPath has around $110 million in annual revenue and serves more than 20 hospital groups. Sonic's share price fell 2.4% on Friday. All right, what's the key overseas news this morning, Sean?
British MPs are going to hold an inquiry into the UK government's trade deal with Australia, warning that its benefits could be less than ministers have claimed. The deal was formally agreed to late last month after months of haggling over details of the pact. Remember, it was announced back in July. The House of Commons International Trade Committee is worried the deal won't live up to its promise. Hong Kong has held its first patriot-only elections since Beijing cracked down on the city and wiped out pro-democracy parties. While 90 MPs were elected over the weekend, the public voted for just 20 of them. 40 others were chosen by a 1,448-member pro-Beijing committee, and the other 30 were handpicked. And finally, Michael, Donald Trump's wall to keep out illegal Mexicans is being restarted. One of the first things Joe Biden did as president was cancel the building of the wall. Since then, there's been a flood of unauthorised immigrants coming across the border and some real horror stories to boot. And as a result, the state of Texas has decided to keep building the wall.
Okay. Now, up next, Sean, is the Daily Interview, and today you're speaking to Fiona Manning from Apostle Funds Management.
It's certainly worth a listen if you're interested in investing in assets that worry about the environment. She was very, very good about investing in ESG assets.
Yeah, it's a really interesting one for investors today. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. While you're there, though, as well, have a listen to the final episode of The Week Ahead with resident economist Stephen Koukoulas. Really a bit of a look back on the year that was in the economy.
Well, just the final episode for this year. We'll be back next year, don't you worry. And Stephen, of course, in the episode today, gives a great wrap of what's gone on. And all in all, I think he gives the economy a pretty good pass mark.
And if you want something a little bit lighter to listen to as well, you can check out the Sunday edition of Fear and Greed. We started off, Sean, discussing the $500 million sale of Bruce Springsteen's catalogue of music, and everything just kind of went downhill from there, didn't it?
We wandered. I wouldn't say downhill, Michael. We just wandered, put it that way.
Wandered in a downhill direction, I would say.
Perhaps.
All right. Thank you very much, Sean.
Thanks, Michael.
It's Monday, the 20th of December, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.